being said, I'm going to talk about what I specifically experienced personally. And so please take that into context when you're listening to what I'm saying here, because obviously what might be good for me, that might be good for you. So the biggest thing for me that stood out was the fit. And the SkyZone goggles fit my face much better. Now the SkyZones come with two of these faceplates here. And there's a wider one and a narrower one. The narrow one is pretty much the same spot on as the one that is on the Orcas. The narrow ones do not fit my face well. The wide one here fits my face well. As far as I know, there isn't a alternative faceplate for the Orca goggles because the opening is, as you can see, is quite a bit narrower. It's hard to see. It doesn't really come out too well on camera. But it's got a steeper angle here. So my wider face, basically I feel the pinching on my temples, on the side of my head here. I have a lot of light leakage in the top here, and also in the bottom, in the nose area, right here. Actually, lots of light leakage here. Obviously, I could probably put some foam in here, and then I know that some people have put in some foam pieces underneath this Velcro here, and sort of push this foam out. Those are things that could be remedies. I have no light leakage on this particular faceplate with this foam here, which is not stock foam. This is like a foam that came with an earlier SkyZone goggle that they don't make anymore. But with this particular foam, and there's lots of third-party foam, by the way, so for both these goggles, so you can definitely find some customizations out there that'll help you with the fit. But I have no light leakage in the nose area or in the head area here, because this faceplate pretty much fits my head perfectly. So that being said, I know there's a lot of people out there that say that any kind of light leakage is a deal breaker. For me, it was a problem at first. When I first put these on, I was having some difficulties seeing the screen, especially if it was a bright sunny day outside and I was not in the shade. I had to basically put the sun behind me. If the sun was to the side or in front, there would be so much light leakage that I would not be able to see the screens, or there would be like either glare or some sort of, it would just be too bright. The screens were bright enough to drown out the direct sunlight. That was a problem for like the first week that I was trying to use these and make some adjustments. Basically, I had to either stand in the shade, or I had to put the sun behind me, or just put, basically so that the sun couldn't get into the goggles. Now, if I'm flying indoors, it wasn't as big of an issue, typically, unless there was like some sort of a light source or something that was above or below. Now, obviously, from below, there was quite a bit of light leakage. I did have to kind of get used to it. I eventually did. It doesn't bother me too much right now, even after using for a few months. Still, I notice it. I know for some people it's a complete deal breaker. Any kind of light leakage, not going to work. I understand that. For me, I just sort of sucked it up and, tried to adjust to the fact that I was getting light leakage. And I did try to stick with the stock foam and everything. And yes, I know that I could have done some foam modifications and stuff like that. I just did the best I could to try and adjust to the form factor that was presented to me, and just do the best I could. Can I still fly? Yes, absolutely. After you adjust. Now, that being said, while the fit on the SkyZone is a lot better than the Orcas, the field of view on the SkyZones, I feel, is a little bit too big. It's about, I think, 52 degrees field of view on the SkyZones. I'm not sure why they went so big. The ones before the regular SkyZone 04Xs, the ones I had previously, were pretty good. They were like 42, I believe. And so they've gone really huge. They also went to a bigger screen. We'll talk about that here in a second. But the field of view specifically was just crazy big on this one. So the screen looks much bigger on the SkyZones compared to the Orcas, because I can't get my eyes close enough to the actual optics. The screens are kind of further away. But because the field of view is smaller, it's like 37 degrees on the Orca, I can actually see the entire screen, no problem. So all of the OSD elements I can see visually, but I can also see that when looking through these optics here, you can see there's a circle there, right? Well, it's basically, it's kind of hard to explain, but instead of seeing like the square screen, I see a square screen with a circle around it, and I see basically it's kind of like looking through a periscope or like a tunnel or something. So you get like kind of tunnel vision to see the screens, but I can see the entire screen. It just looks like it's further away and not as large as the screen looks on the Sky Zone. So that's something that's important to you. Screen size, that's something you have to consider because that has to do with the fit and getting your eyes close to the optics. I can get my eyes totally close on these, and the screens are absolutely huge. But the field of view is so large that I have to move my OSD elements closer to the center of the screen. If I move basically the corners, so if you look at, I'm showing you where my hands are, these corners on the Sky Zone, I can't see those. Those are cut off because the field of view is too large. So if I put any OSD elements in the corners of the screen, I can't see those at all. I have to move them to the middles somewhere or in the bottom middle, something like that, more towards the center, and it's fine. But it's a very, very super immersive feel because the screen's so huge, and you're not seeing the corners. It looks really zoomed in. So if you like that immersive feel, that I think, especially with that, at least for me, the fit and the super large field of view was very immersive, and it's a pro and a con, right? So if you like that feel, that's great. But then if you don't like having your screen cut off in the corners, then that could be bad. And I think the field of view is a little bit overkill on the Sky Zones. But for those of you that can, some people have the ability to see the whole screen. It depends on the person. If you have the ability to be able to see the entire screen, you want that whole field of view, then of course then the Sky Zones have that much larger field of view. Now the optics are very similar. So they do have the diopters and the adjustments, but the range is a lot narrower on the Orcas. So it's a -4 to a +4 on the optics versus a -6 to a +6 on the Sky Zone. So you can see here, I had to put in the Fat Shark inserts here, which are -2 diopter. And so I have this set all the way to -4, plus the -2 gives me a -6. That's what my prescription is. And on the Sky Zones, this goes to a -6, and I have this set in all the way to a -6, and I can see perfectly fine without any additional diopter, little lenses there. So if your prescription is really far out, then you're gonna need additional lenses on top of the adjustments inside there. It's a minor inconvenience, but once I got those in there and made the proper adjustments, the focus is fine. Again, just the screen is kind of further away, but I can't see the whole screen. Okay, so in terms of overall build quality and reliability, I think they're both very good. I think the Orca's build quality is a little bit better, just a little bit nicer. The fan on the Sky Zone is very loud and very annoying. The fan noise on the Orcas is much more quiet and very less annoying. I prefer that it's not as noisy. And so in terms of reliability, I haven't had any issues with the Sky Zones in about the year that I've had these, and none with the Orcas in about the 3 months that I've been using these. So functionally, everything's been working fine. Now, I think the last consideration is price, and this is probably where the biggest difference is between these two models, and something that's probably going to be a big factor in your consideration.
I'm weird because I'm always thinking about what can go wrong. But underbidding the AI is the chips. And the chips, despite the Chip Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Good morning. This is Bloomberg Savant.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to the programme. This is the opening trade, and we have a European futures picture that looks flat to positive. US futures actually improving slightly, just at the margin, flat to negative over in the United States right now. Joining us now to talk about the markets in 3 minutes, our Markets Live Executive Editor Mark Cudmore, with us, of course, from Singapore. Good morning to you, Mark. From London, let me ask you about your view on US stocks, because I think it's changing, shifting, with some of the dynamics we're seeing post the election of Trump for a second time. So we see, I mean, the dollar is higher, yields going higher. Is that the thing that's going to damage sentiment around US stocks, or what do you think?
I think that's part of the story, Anna. Good morning. I think that the whole dynamic around US stocks is making a binary shift. For all of 2024, you know that I've been the adamant perma-bull in stocks. And the main dynamic there was that people were too negative on the US economy. They were too worried about rising yields. And as I've always argued, is that if you get rising yields because of a strong economy, they shouldn't derail stocks. They'll only derail stocks when rising yields start constraining the economy. What we're seeing now is a complete shift. Rather than stocks climbing the wall of worry, we're just seeing sudden extreme exuberance at these much higher prices. I was at a Lehman reunion party last week, and I don't know whether that's clouding my judgment or maybe the excess alcohol consumed at the time, but suddenly it seems like everyone I speak to is just super bullish for a kind of almost the opposite reasons they were before. And obviously earnings season's been good. It was expected to be good. We knew the economy's held up strong in the third quarter, but people don't seem to be noticing that forward estimates continue to get slashed. The analysis of Trump policies is very, very unnuanced. Even, you know, the analysis of what it means, tariffs means the US economy might be clouded by political bias, but no one argues it's bad for global growth, which should affect the earnings of US multinationals. So I think that the stronger dollar is a problem. And at some point, I am worried that, you know, we will see these higher yields constrain the economy. And we're seeing a little bit of fragility in the labor market, which I think has been dismissed because of the hurricane and probably incorrectly.
Mark, a few weeks ago, we all got very excited about the China trade, and we were talking about what would happen next and whether or not this trade had legs. It didn't have legs, and it feels like actually many people are taking money out of Europe, out of China, out of everywhere else to put money to work in the United States right now. Has the China trade already run out of steam? Is India going to follow? And does that money ultimately still though flow towards the United States?
I think that's the narrative people are trading at the moment, but I'm not sure it's correct. Look, China stocks are still a chunk higher than they were. Hong Kong stocks are still officially in a bull market. I think they've been there since May. That story has pulled back a lot further than we thought, but we're still getting continued policy support there. I certainly think the narrative is very, very pessimistic, but I think that story is still probably not brilliant. It's definitely negatively affected by the Trump story, but I don't think there's excess optimism there. It's negativity, which is roughly okay calibrated. I am more worried about the stock markets where there's excess positivity priced, excess optimism priced. And I think that possibly now includes US stocks. It did before. I think it probably does include India stocks. That's a story that even though the economies aren't very linked, the asset story is very correlated to US stocks. I think it's vulnerable.
All right, Bloomberg Market Live Executive Editor Mark Cudmore, we thank you so much. You get more up-to-date analysis from him and the team. Just type in MLIV Go on your Bloomberg terminals. Go from the macro to the micro. Got your stocks to watch with Joe Easton. Joe.
Morning, Critty. So we got some decent numbers out of Siemens today as their data focus overshadows some weakness in the automated factory business, and the CEO of the company spoke to Bloomberg earlier today.
We have a record high net income of 9 billion. We have 15.5% profit margin in our industrial business, and we are extremely happy about the free cash flow of our industrial business, which is 11 billion, 9.5, by the way, all in. So therefore, we are very happy. We are very happy, and we are looking forward to another strong fiscal year in a difficult market environment. So we are guiding a growth of 3 to 7% going forward.
So that was the Siemens CEO speaking to Bloomberg earlier today. As we can see from the screen here, there was a bit of weakness the last time the company gave results, given the softness in the automated factories, but potentially these numbers today should be strong enough to avoid a similar situation for that stock. Then in terms of luxury goods, we got Burberry, this one looking really, really bad. The company predicting sales down 35% in the year ahead. That is bigger than the 30% drop they previously guided for, double-digit declines across their regions as well. In terms of the long-term performance for the stock, it's down more than 70% on a two-year basis, underperforming a big drop that we've seen recently this year in some of the other luxury names. And if we look on the analysts as well, 7 sell ratings, by far outweighing the buy. So potentially some of these declines in sales might already be priced in, but definitely one to watch in the luxury UK space today. Then over in banking, the Italian government selling another stake in Monte dei Paschi. That was last night in an accelerated book build. Banco BPM, the rival, picking up a chunk of that stock. And analysts over at JP Morgan writing today that they reckon this could signal that Monte Paschi becomes an eventual takeover target, and BPM will likely be one of the bidders, according to analysts at the bank in a note this morning. If we look on this stock on a long-term basis, down 80% over a 5-year. It used to trade at around 45 euros, is now just above 5 euros amid long-term capital issues at the lender. Then staying in the banking focus, in terms of rating changes, a couple of downgrades, a couple of decent punchy ones. ABN AMRO over in Amsterdam, that's an underweight of Morgan Stanley. CaixaBank in Spain, that is a sell or a reduce over at Kepler Chevron. And finally, in renewables, Restas cut to hold at Berenberg this morning.
Thank you very much, Joe Easton, on Stocks in Focus. I'll add in another one. This is Stadler Rail, Swiss train maker. The reason I mention this is they're pulling their guidance as a result of the weather disasters, including the floods that we saw in Valencia. They're unable to deliver, supply chain disruptions as a result of that. So, another example of where we see some of these climate change-driven activity having an impact on supply chains.
Talking of climate change, Equinor making an oil and gas discovery in the North Sea. It's a fairly substantial one. Be interesting to see how that reacts. The UK, obviously, I bring it back to the gas story that we were talking about a little bit earlier on. And the last government's maybe more benign sort of operating environment when it came to the North Sea and trying to push it, maybe a little bit harder. Again, then speaks to the idea of what we're going to see over in the United States. I think the connections are reasonably tenuous, but we'll make them just for now. But it's interesting. As a result, maybe, of what we've seen recently, we're starting to see all discoveries being made back in the North Sea.
We'll see how Equinor trades off that in just about 5 minutes' time or so. Quick check on the futures picture, because you are seeing some outperformance in Amsterdam, and it does feel like a lot of that is coming from those ASML numbers. Even though they didn't meet guidance, they affirmed that guidance. It looks like the markets, at least in pre-market indications, are pointing to very much higher. Green on the screen across the board. FTSE 100 flat. The opening trade's up next. This is Bloomberg.
Politics to the world of business. Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stradwell here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of the century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Thursday morning, good morning. Broadly, it looks like Europe's actually going to open a little bit higher, which is interesting given the fact that we priced in the updraft yesterday over in the United States. We didn't price in necessarily the fade that we got at the back end of the session. I know we're all focused on Trump. I know we're focused on what is happening at the Fed. But actually, there's quite interesting corporate stories that need to be folded into the narrative today as well. And I wonder actually whether they will have an impact on what we're seeing in futures and, by extension, into the cash trade, Chrissy.
It's certainly an interesting one. You are seeing futures indicated higher, 0.7% on the Eurostoxx 50. By comparison, the FTSE 100 lagging by a massive margin, flat on the day. But a good chunk of that outperformance, Guy and Anna, is coming from Amsterdam. That idea of ASML, several other stocks as well, lifting that index higher. It's not a futures index we look at that substantially, but it is certainly changing the numbers on those Eurostoxx 50 futures.
Yeah, let's have a look at some of the individual stocks then that could be on the move as a result of some of the earnings stories and other news flow that we've seen this morning. Let's start with Siemens, the German industrial business, pitching strong data centers as helping to offset the automation slump. That automation slump, of course, partly driven by China. The CEO saying this morning that China will come back, though, saying that in an interview with our colleagues here at Bloomberg. ASML in focus, no change to that overall sales guidance. Could we see a slight tick up in the shares at the start of trade, perhaps? AI described as the next big driver in chips. I thought it was the current big driver in chips, so that took me by surprise. Let's talk about Burberry as well. Really interesting one there, of course. The new CEO, Joshua Schulman, has come into the role, and we got the numbers through from Burberry just a few moments, 50 or so minutes ago, and they didn't look hugely dissimilar to expectations. But interesting to get his comments saying that the label needs to course correct after the sales dive, Guy.
We'll get some more details in just a moment. The call will be starting any second now at Burberry with analysts, so we'll get the details of that for you. Let's talk about the opening trade. Here we go this Thursday morning. We are expecting European equities to open a little bit higher, with the exception of the FTSE 100, which actually is in the green, but not by much, as you can see, barely budging off the flat line. So I suspect we're going to be in and out of positive, negative territory on that one. The IBEX, though, is up by 0.2%. The expectation is that we're going to see 2, 3, 4% for the major markets across Europe, backing out the FTSE 100 from that, and we're already seeing it maybe challenging that initial bit of green with a little bit of red. But the CAC 40 is up. It's up by 0.4%. Critic was flagging what's going to be happening with the Amsterdam market. I don't have that on the board. We do have the DAX and the SMI. We'll wait and see what they do in just a moment. It'll be interesting to see what happens with Siemens at the get-go this morning, Chrissy.
Yeah, it's a fascinating one. I'll answer that. We are still waiting for the index level on the Amsterdam index to open, but broadly, it's ASML that's behind the screen on the screen. You're seeing it in the stock 600, for example, the biggest index contribution to the upside, higher by about 3% on that initial stock, and taking with it the entire tech complex. On the FTSE 100, to you guys' point, Anna, it is not the exact same story. Commodities seem to be on the back foot today, and that's showing up in the underperformance.
Yeah, we saw iron ore prices down by 1.9%, I think, towards the end of the Asia trading session, and that can quite obviously have an impact on those basic resource stocks. So we certainly do see some of that. But technology, yeah, absolutely right to focus there, because that does seem to be the best performing sector, and by a little margin, up by 1% or so this morning. In terms of the other stocks that we're focused on then, so ASML is one of those gainers, up by 2.5% this morning. We also have Equinor trading higher. Guy, you were mentioning this one earlier on. That stock is up by 2.5%. We're waiting to see what we get from some of the other companies that we talked about. In fact, Burberry, waiting to see what we get there. So we'll bring an opening price on Burberry shortly.
Energy stocks broadly are though higher. So you've got Total up, BP is up. I think Shell goes ex-dividend today. Just that's one's at the back of my brain in terms of maybe the fact that that could be why it's not on the list that I'm seeing in front of me. But the energy complex broadly does seem to be higher, which is interesting in the light of the fact that we are seeing the miners a little softer this morning. But LVMH is soft this morning. It's down by 1%. It is the leading point drop on the stock 600. But there are some miners in there. But the pharma sector as well, seeing some signs of weakness. Roche, Sanofi, AstraZeneca, all soft as well. I think GSK might go XD
Yeah,
too.
you're correct. GSK and Shell and Sainsbury's.
Excellent.
We should mention that Bayer is also taking a pretty big beating today, down about 2 to 3%, and it was on top of yesterday's numbers as well. This is some continuation of weakness there. They cut their earnings target yesterday, posted a net loss in their agricultural weakness story. So as well, that's going to be one we're going to keep an eye on. We're going to talk about how this index is going to go broadly, though. Are we still in this economic resilience narrative out of the United States, or are the tides changing? We spoke to that very topic about Deutsche Bank's Henry Allen. Take a listen to what he had to say.
I think the US is still the best bet in terms of where things are going next. You know, the US is still the best bet. It's just on a relative basis, you're not necessarily going to see the relentless rally that we have for the last couple of years.
So,
joining us now is Madeline Ronner, portfolio manager at the global equities team over at DWS. Madeline, a pleasure to have you on the program. Thank you as always for joining us. Look, the narrative continues to be kind of a tale of two camps, really. I mean, it feels like a tale of all the time, bulls versus the bears. But the idea that there might be some sort of sentiment change, that the U.S. is no longer the place to be, do you agree with that? Is that the sentiment in your view?
I mean, honestly, like with Trump, with the Trump election happening last week, and with that also being such a clear sweep, and him having such a strong mandate now, so we expect tariffs to happen pretty early on in his presidency. Obviously, we all know that he can do that like off the bat. So obviously that's going to be a problem for export-oriented Europe, right? And if you just look at the history, like usually. When the first day after the election is a positive for the S&P 500, usually it goes up in the 2 weeks after. So we strongly expect actually the US to be kind of still the place to be, at least until the event. We still like European stocks generally for next year. I mean, there are some good reasons too, like the stronger the levels of EPS generally. You still have the valuation discount, so it's important to watch what the 10-year yields are doing in the US, because if they get too high, the valuation of the US equity market could get problematic, and we saw that also in the tape on Thursday, on Friday, last week. And that could play in favor of European stocks, who are obviously much cheaper, even on a sector adjusted basis. But generally, especially until the end of this week, going into a year-end rally, US will likely, in our view, remain the place to be.
Madeline, you mentioned the rates picture as well. Give us an upper bound here on the 10-year that you may actually see the stock market have far more sensitivity to. At one point in the last couple of years, it was 5%. Every time the yield hit 5%, the stock market dropped. Is 5% still going to play that role?
I think so, yes. So if we would see 5%, I would expect especially the US equity market to react to that. We think a large portion of the Trump trade and also the deficit is likely has been priced in before, right? In 2016, it was a large surprise that he got elected. This time, not so much. So the rates already went up in anticipation on the election. But we will still likely see some upward pressure there. So that's going to continue to be a watch item for us. If it approaches the 5%, we will surely expect that to have a negative impact on equity markets. But let's see if it even goes there, right? I mean, we had the inflation print yesterday, so that was in line. That gave the Fed room to cuts in December again. It comforted markets, so yeah, item to watch. But yeah, surely the 5% would become an issue.
Madeline, let's just talk a little bit about catalysts and what could be a catalyst. Is there a catalyst for Europe? Is there an obvious one? What could it be? Everybody I talk to seems to just think that you want to go to the United States, and that seems to be the logical trade right now, and it certainly has been. Is there any reason to buy Europe?
I feel like, for example, if you look at Germany, the DAX has been faring quite well, especially regards to the export-oriented nature of the German economy. But it has been doing quite well because obviously we're getting a new government, likely in February next year. There has been a lot of indecisiveness around that. We have the strong view that the German government has been spending way too little compared especially to other Western economies. So if that would start to pick up and we would really get a large majority there that could really achieve new policy items, I feel like at least for the German stock market that could be a trigger. Otherwise, yeah, we'll have to see if some
valuations
pops up in the US. Yeah.
Are valuations important? It feels like they're being downgraded at the moment. People talk about many reasons why you want to own equity markets at the moment. Traditionally, you talk about valuations. I just don't hear valuations being talked about a great deal. Are they still important?
I feel like something needs to happen for valuations to be important again, right? So either like the 10 years have to go up, you would have to see some kind of inflation reigniting. And obviously Trump's policies will be inflationary, but that takes some time, right? So you will not see that right away. And I feel like the Fed, I mean, they said, okay, they're not going to react to the Trump election right away, but at some point they're going to have to, because simply it will lead to higher inflation longer term. Inflation pressure will go up. And if something like that happens, that could lead to valuations mattering more again.
Madeline.
Yeah.
Yeah, sorry, I think you froze briefly, but you're back, so that's good. We'll persist and hope that the connection it remains stable or becomes stable. Let me ask you about Germany. Guy was asking about the European broader story, but on Germany, you say in your notes ahead of our conversation that a US tariff on German imports would deduct some 0.2 percentage points from German GDP. Is that the sum total of the impact on the German economy, or does that have ripple effects through the German economy that aren't being picked up by the scale of that number? Because that seems really small, and it seems like something, well, you maybe don't worry about that.
Yeah, so that would be like only the direct effect that our economists estimate. Obviously, there could be some more ripple effects, or there will likely be more ripple effects. So the impact, I agree with you, would likely be larger than that.
Would likely be larger, okay, and so I guess partly that will be determined by the types of tariffs and the extent of them. So we'll maybe leave that maths task for later. What about sticking with Germany and the perspective there? What's the investment community looking to the German government to do, whatever the German government looks like come February? Is it all about the debt brake, or is the debt brake, changing the debt brake, a necessary but not sufficient part of what we need to see in Germany, or maybe not even necessary and other things are required?
I think so. It's definitely a part of what's necessary. Without the debt brake changing, I don't think we will see an acceleration in growth. And you see that clearly if you map basically the spending that other economies did during and after COVID, and that we did all levels. So I feel like that's definitely something that needs to happen. I think we can all agree, and that's also the investor sentiment, that this will alone not be enough. So we need structural change with that. So you need to do something about the energy costs, which have obviously in the US declined since pre-COVID and increased in Europe, in the UK as well, and in Germany too. So that needs to be addressed for sure. And lastly, also the bureaucracy, right? So easier processes and just also a more clearer direction from the government, so companies can feel more comfortable in where to invest.
I also wonder what euro-dollar at parity and maybe lower taxes, going from 30% maybe down to 25% corporate taxes, could do to the German corporate outlook. Madeleine, thank you very much indeed. Greatly appreciated. Madeleine Rohner, Portfolio Manager on the Global Equities team at DWS. Core 6 looks like this morning. There's some significant stocks that are worth watching out for. We are seeing a big pop higher in Burberry. What you're not getting is that similar pop in LVMH. Got a new CFO at that business. The stock is down this morning, as you can see. Elsewhere, Novo soft. The drug sector is broadly soft this morning. Nestle is a little soft this morning. But Ferrari's up. And when it comes to the kind of the AI trade, look at what's happening with Siemens. Look at what is happening with ASML this morning. Schneider's up 0.7% as well. There's a bunch of stocks this morning that are pricing in that grids network connection story. And it's interesting to see how strong that is. But ASML up very nicely this morning. Big points gain for the stock 600. Let's deal with some individual companies on a more granular level. Joe Easton's got the details.
So you want to start in the Italian banking space, guys, because we are seeing a lot of action in this market this morning. Remember, last night we had that breaking news. The Italian government was offloading around 15% of Banca Monte dei Paschi over in Tuscany, and that stock gaining around 9%, even though there was a slight discount on the share placing. The thing that's moving it is the speculation that this could potentially lead to an eventual takeover of the Italian lender, as the Italian government is looking to fully exit the stake. Banco BPM, BAMI, picked up around 5% of the stock, and Anima Holdings, which is an asset manager, also picked up some shares. There is a JPM note saying BAMI BPM will eventually bid for Paschi maybe within the next year, according to analysts. That's driving those stocks at the moment. Then Siemens, this was a nice gain. As we've been discussing, it is due to mostly their data center focus, so really leaning into that AI trade, as Guy was mentioning a moment ago. That is making up for losses, continued losses in automated factories, which has been really hit by a slowdown over in China. But we can see a very nice gain for that one for Siemens, up almost 6% at the moment. Then Burberry, this is another big gainer. Finally, a bit of positivity for the long-suffering Burberry investors. Remember, the stock down 70% over the past couple of years. They're warning of 35% sales drops over the next year, but the stock's up 8%, just telling you that all this bad news probably now priced into the market, therefore getting a bit of a rebound finally on Burberry today. Then over in renewables, one stock not getting a rebound is SMA Solar over in Germany. Warning of weakness in solar panels sold into residential buildings. So this is a European-based company, does Germany, but also other countries as well. A warning last night, further declines in sales, and that stock getting slammed today, down 20% almost at the moment. And then finally, in the auto space, breaking news coming out of Volvo this morning. This is Volvo Cars announcing the sale of their stake in Link. This is a company that's joint owned with Geely over in China. They're announcing a sale of that, exiting that, as I say, and the stock is gaining 3% over in Stockholm. Bit of positivity in autos this morning.
Okay, yes, some really fascinating individual corporate stories. We're getting further lines coming through on Burberry as they have that host that call with journalists. So we'll get back to that story. We'll also talk about what's going on in Germany at a political level and at the corporate level. Coming up, the German Conservative leader Friedrich Merz has launched his election bid with a stinging attack on Chancellor Olaf Scholz. We'll get the details of that next, and of all of these earnings stories that are coming through this morning. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Jay or other authorities.
Who face bigger challenges next?
Was going to keep winning World Cup. This is a three as the economic picture. The intersections of Hollywood.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl,
I
right?
can't wait. It's like opening presents in a book.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
And that is why I will request a vote of confidence on December 11th, so that the Parliament can decide on it on December 16th. And that is the basis for the elections in Germany, so that the citizens can say how things should continue in this country. You are dividing the country. Mr. Chancellor, you are the one responsible for this controversy and for this division in Germany. This is simply no way to govern a country.
German Chancellor Olaf Scholz and CDU opposition leader Friedrich Merz speaking there in the Bundestag yesterday. We're getting an early indication as to what this election campaign is likely to look like. Let's get more on this unfolding political story. Oliver Crook joins us out of Berlin. Set it up for us, Ollie. What did we get yesterday? It was a tough day in the office for Olaf Scholz, certainly at the Bundestag.
Yeah, you could certainly say that guy. It was really very tough for him. I mean, he had to speak before Parliament and then just basically get lambasted by Friedrich Merz and a number of others, and really each of them setting out their stakes and kind of where their positions are going into this election campaign. I mean, maybe almost the official kickoff of the election campaign. And what Olaf Scholz did is he stuck to the things that he's done in the past, basically saying that you do not need to choose. Germany does not need to choose, does not need to trade off between having investments into companies and investment in infrastructure, investment in security, investment in good jobs, investment in pensions, investment in defense. These are two things that are not mutually exclusive, and that Germany needs to do both of these things all at once, which is why one of the many reasons he's in favor of releasing the debt brake. He also sort of put out his position on Ukraine and tried to really spin his reticence to give more support to Ukraine in terms of the permissions to strike deep within Russia, saying that he is a chancellor that will not escalate the conflict, and this is very important. Those are all positions that are in very sharp contrast to Friedrich Merz, who is very open to cutting things back in the social welfare state, has spoken for a long time about the need for Ukraine to be able to strike within Russia. But Friedrich Merz also said that he will not be basically joining Olaf Scholz and the SPD on any legislation, basically. So you're going to get a couple more lost months arguably, that really Germany needs for its economic recovery and direction politically.
And so, Ollie, the issue then that hangs around German politics, the big question, you mentioned it, the debt brake already. I mean, is there any realistic expectation that that brake is released? We get quite mixed views around this desk, I have to say, about the importance of that, or the to what extent that is integral to the change that's required in Germany.
Yeah, I mean, absolutely. I mean, your last guest just saying that it actually is a fundamental part. I mean, listen, Robert Habeck, the economy minister from the Greens, has likened it to sort of boxing with your arms tied behind